The euro is breaking down to levels we haven't seen in 12 months. So in this video, I'm going to share my target for July, which is probably going to surprise you. And I'm also going to talk about the pound, which could be following the euro lower this week and given a breakdown of its own. And lastly, we're going to talk about the DXY. I'm going to share my 2026 target for that market, which I don't typically do, but the price action has been so incredibly clean over the past few months that I felt compelled to do so. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So let's start here with the euro daily time frame. So this is the EURUSD on the daily time frame, and we've talked about this now for a very long time. If you've been following this channel for a while, then you know about this close right back here in March. So this was significant because this up here was a break of structure. You can see the close above this high back here, meaning that this became our external low, and we got the close below it of over 50 pips. So if you watch those videos from back here, what we were talking about was this inefficiency, okay? So in those videos, I was talking about a potential for a lower high to develop right around 118. I even had this channel right here marked out when the market tested this up here, okay? And again here. So what you can see since that time is we've had lower highs and lower lows. So I have been bearish on the euro since back here. However, I was also looking for that push up into 118 as I talked about in those videos. So all in all, guys, we've, navigated this market really well, especially in our Discord group there. And what you'll notice too is that this is a classic rounded top pattern from the euro. You can see this here. Again, we have the change of character marking where the top was confirmed right here. And then we have this lower high at 118. So in my opinion, we are headed lower. We have been headed lower since these highs back here. Now let's talk about here for a second where the euro could be headed. And I'm going to give you my July target. However, before I do that, if you do want to see how I trade SMC full time, then check out the link right here on the screen. That's going to be a completely free training. It's 100% free. All you have to do is click that link, head over to the website, enter your name and email address, and you will be emailed a free training. So check that out. It's 2 hours of content that shows you exactly how I trade SMC. If you don't see the link here on the screen, then see the description of this video. So guys, I think that, right now, based on everything, based on the change of character, we are seeing the euro now trade at 12-month lows. We have to go back here to June of 2025 to find the last time the euro traded down here at these levels. And so with that in mind, I am looking for obviously the push lower from the euro over the coming weeks. Now, in terms of my target, let's talk about that first here, because what you'll notice is that we have some obvious lows back here in this area. Specifically, we have this low right here. Now, this clearly is going to be a support level for this market. Okay, so down here, right around 1.1062 or so. And so buyers are going to come out here and defend this. Now, you can also see that on this here, this is a daily time frame. We don't know this here for a fact, but I can tell you that with this push up, okay, this aggressiveness, even this low right here, I am sure that if we drop to some intraday charts, that there are inefficiencies down here. Okay, so really in terms of targets, it's going to be 1.11. That would be the first target there. And then if we look back here at this expansion, okay, so this displacement that occurred right here, even though we saw a partial retrace, if we head back here toward this area, I'm going to turn on bar replay and head back here toward this price action because I want to see how this developed. Okay, so we know that this level here at 110.62, that's going to be that low that formed. So we know that anything after that was pretty much mitigated. But if we go in here to a 4-hour time frame and just check this out to see how it formed, right? So here's the low and there's the push out of the low. So basically anything below here is still going to be an inefficiency. Now, in terms of orders sitting down here, the odds of that are pretty slim. I mean, this is going back to April of 2025. So this idea that orders are still sitting here a year later doesn't really hold water. However, at the same time, inefficiencies like this, markets do not forget these, okay? So markets have a tendency to target areas like this regardless, okay? So what I'm looking at here for the euro is basically anything below this low from back here. So again, this is going to be support. Buyers are going to come out here and defend this. However, at the same time, knowing that we have this displacement from back here, okay, in 2025, and this area down here is left unmitigated, this down here is going to be essentially my target for the euro over the coming days and weeks. So really right around 110, okay, give or take. So that whole area down here is really going to be my target for the euro, okay? So how fast could that materialize? I mean, we'll have to wait and see. But right now, with the way the market looks, I do expect this to be a pretty aggressive drop. And the reason for that is if we go back here to a 4-hour time frame, what you'll notice is that the euro price action, the structure here has shifted. So back here, this was a pretty controlled drop. And a lot of this had to do with the fact, everything going on in Iran and the Middle East, all of the back and forth, the headline wars, right? We all know what happened there. And still, it really is happening. But this right here was a pretty controlled pullback, right? A lot of choppy price action through here. But what you'll notice is that since this high back here, okay, since FOMC really, this move has accelerated, okay? So given this acceleration out of this previous structure, okay, again, you can see where it was pretty controlled back here and now we have accelerated. I do expect this aggressive drop to continue, okay? Now, this isn't about forecasting. You can't just blindly expect this to happen. There are no guarantees in the market. But typically when I trade a market like this, I would be looking for a push up here into buy side imbalances, right, to look for shorts. However, in this case, I just don't think we're going to get that high. I think if this drop right here is going to target the bottom of this channel and possibly those inefficiencies from 2025 down here in this region, I just don't see us getting back up here toward this area, okay? And I could be wrong, right? We might get it. However, I do think that looking for maybe a more aggressive approach to shorts might be in order here. Now, that's just my opinion, guys. It's never financial advice. But looking here at something like a 15-minute chart, you've got now here over the past 24 hours, you've got areas like this back here, this inefficiency. Now, notice what happened on this run up, okay? This candle right here was also an inefficiency, and look what the euro tapped into right here. So now with this current drop, you can see where we have basically everything above these highs right here, right around 1.1385, this up here is now your inefficiency, okay? So I think if we were to see the market come up here, push into this area here, and a lower time frame change of character, that could be a short. However, at the same time, you've got to understand that if that is going to be your approach, then it is a little bit riskier than looking for a larger retracement, okay? And really, I think that if we were to close the day below these lows back here, so basically you look here at this low and this low from back here, you've got this one back here in 2025, you've got this one here in 2026. I think if we close below this area, guys, again, I'm hesitant to say that we're going to get the push up here in this area just because of the acceleration of this move, okay? With this in mind, I would be looking for this really to be capped right here around 114, maybe just above, okay? If we were to reclaim this area, then of course we are probably looking at a larger retrace, but I think that these lows back here just above 114, I think that this is probably going to cap any push higher, barring something significant, obviously. If today were to close, back up here and we were to get some kind of positive news for the euro, bearish for the US dollar, then that could change. But I do think that, again, given the aggressiveness of this drop right here and the change of the movement that we've seen over the past couple of months, I do think that this area down here is now exposed. Okay, so that is my target for the euro right now. Still bearish here as I've been for a while. You can also see some really nice symmetry from the euro over the past really, in 2026, all of 2026, we've been forming this descending channel. So it makes sense, right? We're coming off the highs now. We're breaking to fresh 12-month lows. It does make sense to target potentially the bottom of this channel, okay? Again, barring something significant that would be bullish for the euro and bearish for the US dollar. Okay, so let's move on now to the pound. And if you guys are finding these videos helpful, be sure to leave some love in the comments and also subscribe to the channel because I'm putting out videos like this one every single day. Okay, so with the pound, we've talked about this for a while, how the pound is kind of lagging the euro in terms of weakness. So whereas the euro, you can see back here, we had a really nice change of character that developed. The pound really hasn't given us this. So in terms of the structure here, you can see that this was the high back here that we closed above. So this was your BOS, making this down here the external low. Everything since this point in late 2025 has just been internal. Okay, all of this just has been internal price action. So I do think with the euro breaking down, the DXY obviously headed higher. The pound, it's really only a matter of time before we get a close, not only below this low right back here, so this low around 131.60, but also this low back here around 1.3, okay? So like the euro too, typically I would be looking for a push back into inefficiencies like this, and maybe we get it, right? Maybe we get it. But typically I'd be looking for this up here to look for shorts. But just like I mentioned with the euro, I mean, given the aggressiveness of this recent move here, I think that looking for a push all the way back up here to look for shorts, I just think is a little bit naive in the sense that this move has accelerated, and you can really see it again on the euro. And we'll also take a look at the DXY. You can really see it there as well. So for the pound, we have this low back here. Okay, so close below this low, basically you have the market taking out this structure right back here with this lower high. And then I'm looking for this low down here around 1.3. Okay, So longer term, like the euro, I do think that we are headed lower. With the pound too, what you can see here is that we do have some inefficiencies back here in this region. I mean, specifically, like if you look from this low right back here, okay, let's head back here toward this area and check this out. Because right back here, what you can see is on the daily time frame, look at this inefficiency back here. Okay, so this was that sideways action that we had back here. We had the market dip below it and then reclaim it and take off. Now, this displacement through here, though, this is all just one big inefficiency. So just below 1.3, like right around 1.29, down toward about 1.285, this region down here, I think, is going to be one to watch over the coming weeks. Okay, so basically this entire candle, and really you can make the case too that it even starts down here with this candle. So really this entire region down here is going to be my target for the pound. So below 1.3. Okay, so 1.3 is going to be defended. The likely scenario is that we get the market or buyer stepping in here to defend this low down here. But from that point, I would be looking for a lower high to develop to target this area down here, this inefficiency down here below 1.3. Okay, so looking now at something like a 1 hour or even a 15-minute chart, if we head in here, what's key is waiting for a close below this low back here. But really, in my opinion, if this acceleration continues, it's really just a matter of being a little bit more aggressive, possibly, just my opinion, not financial advice. But instead of, like I said, instead of looking for that large retracement back here into areas like this following FOMC, I just don't think we're going to get that given what I'm seeing from the euro and the DXY. Okay. So if you're going to get short, you might have to be a little bit more aggressive, but waiting for some retracements into imbalances is still key. Okay. So let's wrap up here with the DXY. All right, so in the SMC outlook, what I talked about there was the fact that if you go to a weekly time frame, we had a weekly close at 13-month highs, okay? And like I mentioned in yesterday's gold video, look, there were comments on those videos talking about how people were bearish on the US dollar. And I'm not going to sit here and tell you how to trade or what kind of bias you should have. But when a market trades and closes a week at a 13-month high and breaks above highs like this back here, I mean, this was a long time coming, guys. This was a lot of price action back here. And then this right here was last week's close. When you get a close like this, okay, it's not the time to be bearish on this market, in my opinion. I can't sit here and say it's financial advice, but look, we had a close at 13-month highs. It looked bullish, right? The market's coming off of this area down here. Like, look at the monthly time frame. We've talked about this as well. Okay, look at this. From 2011, you can see that we have the lows down here and we have these highs. Okay, so if you're getting bearish on a market that is coming off of the lows like this, had a weekly close at 13-month highs, and furthermore has imbalances like this up here, okay, 103 and also specifically 106 at the top of this channel, okay, that in my opinion is not the recipe to get bearish on a market. And clearly you can see that so far that has been the right call because the DXY so far this week is just taking off, okay? Now, let's talk about a few things here on this chart. So specifically, I want to talk about this right back here. And the reason I have this marked out is if we go back here toward this area and let's go to a 1 hour time frame, okay, what you'll notice is that back here, what we want to pay attention to is the drop and the aggressiveness of this, okay? So this back here, what you'll notice is that if we go to something like a 4 hour time frame, okay, and just play this forward here, what you're going to notice is a few things. So we have the market dropping down, right? And then we have it coming back up here toward this area. So we did mitigate a decent portion of this imbalance back here from basically this high. However, there is still the inception point where this drop started right back here. Furthermore, what you'll notice is that we have an open gap. We have an open gap right around 103.69. This right back here. So if I move in, what you'll notice is that we did not fully close this gap. Okay. So here's the gap right here on this candle. And you can see that the DXY gap down, we did not fully close it. So for me, this area between really 102, let's call it 102.8 in this general region, all the way up to about 103.69, this is going to be an area where the DXY could potentially target relatively quickly. I mean, I'm talking over the next 1 to 2 weeks. And again, this just goes back to the fact that you look at the price action here, we've gone from a pretty controlled uptrend to now just going parabolic and straight up, okay? So, I mean, look, the DXY could even test the top of this area this week, right? It's only Tuesday. The market isn't trading that far from this. And furthermore, just like the euro too, like I showed there, you can see we've got the highs back here and we've got the lows down here. Now, this is a little bit of a smaller channel than you saw on the euro, and this is why I also use the DXY. So when the DXY gets up here, if it gets up here, I do expect this region up here somewhere to serve as resistance. Okay, sellers are probably going to step in and defend this. However, just like I said over the weekend, that's not a reason to be bearish on a market. I mean, again, if you're getting bearish here, guys, then in my opinion, that is the wrong move, because even if we were to see a pullback from here, you don't know if we're just going to get this, something more aggressive, or we just, come up here, test it, we get a little bit of a pullback, and then the market just continues higher, right? So it's not the right time to be getting bearish on a market like this. In my opinion, I'm looking for US dollar longs only. Okay, that is it. Okay, so longer term, if we take a look at the monthly time frame, and look, guys, it is going to be difficult unless you're kind of you're being a little more aggressive with your entries to get into stuff like the euro and the pound right now. But look, we've talked about this for a long time. This is nothing new. We've talked about all of this. In fact, even just this back here, right? This push off of support, we talked about this here as well. I mentioned this several times. In fact, 109.47 was the level in an SMC outlook I said could be a buying opportunity down here. So we've talked about all of this for a while now. So this isn't just a case of, now it's difficult to get in and there haven't been other chances, because there have been a lot of other chances. So going back here to the monthly, let's look at this here, because in my opinion, I said this last week when the DXY was quite a bit lower, but again, you can see off of this low back here, this general area up here between 103 and 103.7, I think this is going to be possibly the first target here, the first stop for the DXY. And then above that, we have this area around 106, okay? So off of this low right here, this is a fair value gap. This is an inefficiency in the market that is clearly still wide open, okay? So open for business, as I say. So in my opinion, this area up here for the DXY in 2026 is probably where we're headed. Look, we could head higher, right? We could test both of these levels and then just break out of this as a possible bull flag, okay? But I think in the near term, I say near term, possibly months, this level right here and this level could be in the cards for the DXY. Okay, now in terms of support, right? If we look at this here on the 4-hour, clearly the market is breaking above the channel that we talked about in the SMC outlook. And this is, again, if you go back there and watch that video, I said this was not, in my opinion, the time to be getting bearish on the dollar, just because you don't know if we're going to get a pullback from here or if we're going to get this, right? I even drew this out in the SMC outlook. So there was no reason to be bearish on the US dollar here, in my opinion. But as far as support goes, you've got this level down here now, the top of this channel. Of course, we have inefficiencies back here as well. But like I said, with the euro, I am doubtful as to whether or not we see the market drop all the way back down here, okay, toward 100. In my opinion, the acceleration of this move out of here, I think that we are likely to see shallower retracements, okay, toward this area up here around 1.25 to 1.103, or I'm sorry, 102.5 to 103. I think that retracements could be a bit shallower here for the DXY on our way toward this area. Now, look, something could come out that changes this, of course, especially with the craziness of everything going on out there right now. A headline could come out and completely change this. And if we were to see the DXY now give up lows like this back here, then we are probably looking at a deeper retracement before the trend continues. But right now, with this acceleration, I am looking for shallower pullbacks as of right now. So I truly hope this video helped. Be sure to check out that free SMC training that shows you exactly how I trade SMC full time. It's right here on the screen. All you have to do is enter your name and email address to get free access. So trade well out there. Until next time, I will talk to you again tomorrow.